important news in the financial world this past week that relates to real estate. And there's a lot of noise out there, so I'm bringing you the data and we will go over how it affects you, whether you're considering to buy, sell, or invest. So finally, the consumer price index came down 0.1% in December, in line with economists' expectations. So inflation is starting to ease. Jobs report was also very good. Unemployment rate continues to be low. So as a result of this data, we saw the markets rally. We saw mortgage rates drop down a little bit. They're now below 6%, which means if I'm a buyer, the monthly payment for that same house just came down. These favorable economic indicators show what the Fed has been doing is working and the market is responding the way they anticipated. Now, if I'm a buyer and I'm seeing a 5 instead of a 6 as my first digit in my mortgage, I'm much more likely to take action. It makes sense not only cost-wise, but it's also a psychological thing. It's the 599 effect. So if I'm a seller, I need to move my time frame up if I'm considering to sell and get my property on the market sooner rather than later. There's more buyers out there. Activity has increased 27% according to showing time, and we know inventories continue to be low. They have increased, yes, but they're still historically low. Sellers should be accelerating their time frame. More buyers, still limited inventories. And if I'm a buyer, I also want to take action because there's many buyers out there that are not getting the right advice and just continue to wait. The market has changed. If you're thinking about moving, you've got to have a strategy session, a planning meeting. Sit down with your local expert and determine the correct strategy to navigate all this data because there is opportunity out there right now and the savvy consumers are taking advantage. Let me know your thoughts.